In my book, the most accredited investors in our funds are these young people who really know our research and are passionate about following it and are using the technologies, as opposed to those with the higher income levels, which really don't know much.
One of the worst starts in history occurred at the beginning of 2022. However, during a downturn, cryptocurrency is hit even harder than tech stocks. Being a market leader and at the forefront of innovation, Cathie Wood is no stranger to volatility and believes that we can actually benefit from it. Wood says the crypto rebound will be explosive, and when it happens, it will be much like a coiled spring. She has never seen things this underpriced in her career so far. Venture capitalists may be predicting trouble ahead for the private market, but Cathie Wood has always been known for her bold and risky bets on tech and innovation. Ark Invest has utilized the strategy to invest in innovation-based ideas like Bitcoin, Zoom, and Tesla. Cathie also analyzes the current market's record high inflation and the rising volatility, as well as the chances of a global recession in 2022. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Do you have a view on Jack Dorsey's concept for block organizing a distributed Bitcoin mining operation in every home?
Well, we worked with Square on that concept. There's a video, a YouTube video out there called The B Word, and it was a half day of talks. A lot of it was around environmental, because at the time Elon Musk had put Bitcoin onto his Tesla's balance sheet, but then said, whoops, I didn't realize the environmental ramifications. And so we worked closely with Square to do that video. The first one is Jack Dorsey, Elon Musk, and I was with them, and Steve Lee, another person from Square. And we talked about the environment. And it came out of our research in collaboration with Square that, wait a minute, if you make Bitcoin mining a part of the utility infrastructure, you actually will accelerate the adoption of renewables faster than would otherwise be the case. Because in St. Petersburg, let's say here, you've got sunshine, you filled up the battery in your home, the excess power is just wasted. Why not have it? Why not have it go into Bitcoin mining, which could shore up the ecosystem and help fund solar and wind and other renewables? So we're definitely seeing eye to eye with Square on that one.
Could proper regulation increase confidence in cryptocurrency, maybe iron out some of the trading and blockchain infrastructure glitches, and perhaps attract even more investment into cryptocurrency, or do you think it'll have a negative and dampening effect?
Well, it depends on the country. Some countries want to stamp it out, right? Other companies want to invite it. And that's been a good tension if you believe in free markets and not too much regulation. It's been a good tension for our own regulators. You know, they see other countries, Singapore, Australia, UK, eager to bring, and UK especially after Brexit, eager to bring innovation into their countries. So it does put a bit of a brake on our regulators. I've seen it in other areas. The FAA, when we first started the company in 2014, said drones weren't going to be a consideration for years. So Amazon took its drones over to India and Australia and Hong Kong and so forth, and the FAA saw the light. I think the same thing is happening with crypto. We've gotten to know some of the regulators, and I'm very impressed at what they know and the technology DNA they are bringing into the discussion at the SEC. Gary Gensler at the SEC, having been, he'd been at MIT working, I think he was a professor in the blockchain space. He sees the power of the technology. And I think at the end of the day, he wants to regulate it, but regulate it in a way that it leads to great success for the United States in this new area of innovation. We did a study for institutional investors around the correlations between and among the various asset classes, and it's up on our site. I think we did it in 2020, and at least back then, the correlations were extremely low with every asset class. The highest was 0.34 with real estate, believe it or not. Now, the one time you will see the Bitcoin, the crypto markets highly correlated to equity markets is when there's a serious risk off. For example, I believe it was late 2018, 19, early 19, hedge funds, they were very involved with crypto, and they were in very illiquid positions. So what was the most liquid of their positions? It was Bitcoin. So Bitcoin acted just like the stock market. But for the most part, other than during those times when, when funds are too leveraged over their skis in exposure to any one market, you will see those occasional, we call them correlation to one moments, but they're usually at extremes and they're usually near the lows.
You mentioned the metaverse earlier. Do you have a sense of how quickly the metaverse, perhaps you could explain your understanding of what the metaverse is, how quickly that is likely to come upon us? One of our attendees mentions that on the Q&A that South Korea is doing a particularly strong job in this area. What are they doing that we are not doing?
Yes, well, first of all, let's describe a little bit more when we talk about NFTs, especially non-fungible tokens. So I'll explain this a little bit like I did the monetary system. So first, private, global, again, rules-based property rights system. From our earliest days in speaking with regulators, both state and local, because we have 50 states, each has regulators, and the federal, we have, I think, 6 financial regulators. My first impression, listening to them describing what we were trying to understand and what they thought, was that no regulator wants to be blamed for preventing the US from the next big thing, the next internet. And I still think that's true, but I do think we need some regulation. There is a lot of fraud taking place. We need some protection. I will say the other thing, though, this movement towards higher thresholds for accredited investors is really rubbing new investors, the likes of whom are in our funds, the wrong way. You should have to prove perhaps your knowledge of the risks as opposed to have a certain income or asset threshold before you can be allowed to participate in certain markets. So I'm just throwing that out there as well, because that's another regulatory conundrum when it comes to innovation. Because in my book, the most accredited investors in our funds are these young people who really know our research and are passionate about following it and are using the technologies, as opposed to those with the higher income levels, which really don't know much. They're very index driven.
Long-term and short-term investors are still above break-even pricing, indicating that there may not have been a mass capitulation. The open interest in Bitcoin futures contracts has also surpassed all previous records, standing at over 480,000 Bitcoins. The open interest study by Ark Invest confirms that Bitcoin's perpetual contracts are presently trading at a very bullish discount. After a string of several months in the red, it appears that Bitcoin is about to break this trend and move in a more bullish direction. At the start of the week, Bitcoin opened at $21,028 and is currently sitting at $20,280 overall. The total market cap increased to 3.1% in the last 24 hours, putting it at $1.33 trillion, making it the leader in growth among the top 20 cryptocurrencies. What do you think about Cathie Wood's current crypto and market outlook? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.